Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to be looking at a number of stocks today and also the indices and gold, what's going on with those markets. So the first one we're looking at is a very familiar stock to a lot of people who like coffee. It's Starbucks. And as you know, we've been bullish on this when our trade triangle turned positive at 59.31 on the monthly, which is right here. So I've drawn a close-only daily chart to illustrate how we think this market can go higher. As you know, this is an all-time high, closed on Friday, an all-time high for Starbucks. But what I want to do is measure from the lows, which are right here, the recent lows, let's say around here, and the recent highs. And if we look at that, we're looking at a potential of, let's say, between 50 and 58. So that's simply about 8 points, so plus or minus 8 points from here to there. So we think we could see Starbucks, if we say that, call that 7 plus 8 or whatever, we could see Starbucks moving up to the 64, 65 target area. That, I think, is a pretty good bet for right now. We're currently trading at 60, 68, so it doesn't have that much further to go, but the reality is it's been really, really strong, and you don't fade new all-time highs on any market. So again, at this very simple formation, which is right here, and the breakout clearly above that spot to push it to new all-time highs. So let's move on. The next stock we're looking at is Netflix. You can see all of our trade triangles are positive right here, plus 90, a very strong upward trend. We're above the 50 line on the RSI. The key level here to me is to see this stock close over the 115 area in a very convincing way. I think we're going to see this stock go up and challenge the 125. I think it'll ultimately make all-time highs on this current sweep. But right now we want to see a little more activity on the upside. And if we look at a candlestick chart, you can see we've had a couple of soft days. I think probably tomorrow or even today we'll see this market begin to pick up. This is a very strong day, cannot be ignored, and I think we'll just see a little bit of a rest period between, let's say, the 112 area and the 115 area. I think once we start back up and we close over 115, I think we're off to the races and have a nice push up to the 125 area. Here's Amazon, one of our favorite stocks, and as you see, it's a juggernaut. Jeff Bezos has done so much right. He's just confounded everybody, just pouring money into development, into the cloud, into services, different services. They just started a service, I think, last week about going really after Etsy, which is another internet company for handmade goods. I mean, they have the potential now. It just makes it so easy to buy from Amazon, and that's the key thing to look at. So here's what we're looking for with Amazon. We're looking for the market to go to about the $600 level, and here's how we got to that number. So we look at, I'm just going to go back to a close-only chart. You can see here's the low, let's say around 460, and the recent high around 550. We'll call that 60 points. It turns out to be a little less than that, but $598 to $600 I think is in the cards in this stock. So here's a low right here, looking at the recent highs around here. We've broken over that level, so we're looking at the 598 to 600. That's our target zone for Amazon. I think it's a good bet. I like this stock a lot. It's got a lot of good growth potential. They have their earnings coming out later this month, and I think that's going to be a blockbuster earnings for Amazon. It's going to push it up to those $598 to $600 level, and that's a nice 10% return from where we are right now. Now, gold is really acting very, very well in my mind. It was sort of the ugly stepchild. Nobody wanted to touch it for a long time, but now we've got our trade triangles in place. The weekly and the daily are all in sync. We have a 70, which is what we expect on just those two, and this is a strong trend. If we close up here at 162.43, the all-time high, the recent high we're looking at is 1,160.54. Any close over that level, and we certainly are over that level now, in our mind will set this market to go up much higher. And I would say a measure from this level here, the 1,110 level, to the 60 level, that's $50. And so you're looking at somewhere, let's scope this out just a little bit further to give you an idea. So if we just measure from, let me get my trusty pencil in here. So if we just measure from the lows that we're taking right here to the highs and flip that over, so we'll just do 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So it's somewhere around this level here, the 1210 level, 1200 level, which takes you back up to these areas here, which was resistance. So I think that's what we're looking at right now in gold for the fourth quarter of the year. Again, we're above the 50 line easily, and it just looks like it wants to go higher. So bullish on gold. You should be long this market. This is the Dow. Now, we've talked about this before, so it's no surprise. We have a green trade triangle right here indicating you should be out of the market. Out. This is not necessarily a good sign once you see this. We could see the Dow moving back up to the 17,400 level, which is right here, 17,500. That would complete this sort of pattern we're seeing here. So let's see how that plays out. But generally speaking, we do not want to be short this market at the moment. On the sidelines, we don't want to be long, but we don't want to be short. Look at some of the stocks. They're much more interesting right now than the indices. This is the S&P 500. Again, this is flipped over. You've got a double bottom right here, and you've got a pivot point. Let's just put in double bottom. There's the pivot point. You've broken over that level. It looks to me we could see the S&P 500 back up to the 2100 level, which is right here. Hard to believe, but that's a ton of resistance right here. I think if it gets up there, it's going to have a really hard time. And remember, our trade triangles, at least for the moment, the weekly is still negative. We are above the 50 level, and that's a good sign to push it higher. But don't want to be bullish, but we don't want to be short either. So pay close attention to that. Last index we're looking at, which is by far the weakest, is the NASDAQ. And you can see we have a double bottom, what appears to be a double bottom. We're barely over the 50 line, but we still have this resistance at 4,900. That's major resistance. It needs to get through there. Whether it does that or not remains to be seen at this point in time. 55 is a trading range in this index. This is the euro. I'm going to put a candlestick chart on here. You can see it's pretty much still positive. We are plus 90, indicating an upward trend, but it sort of really hasn't gone anywhere to speak of, so I'm not totally enthusiastic. I mean, if you just look at this market going back, let's say to May, you can just sort of draw like a big square around here. It really it's contained most of the action, which is not too exciting for Forex trading, but it does give you some opportunities. This is crude oil. We are still, the market pullback with a big down day yesterday, pulled back to the support line at 50. Again, our trade triangles, the weekly is positive, indicating the trend is up, but the interim daily is indicating you should be on the sidelines for the moment. So sidelines on that, but we've given you some good stocks to look at. We still think they can go higher. Let's see how it works out. But I'm Adam Hewison for Market Club. Thanks for stopping by, and every success using Market Club.